Let us jump into technical analysis trading using moving averages. Here we go, and starts with one introduction to technical analysis definition. Technical analysis involves evaluating securities by analyzing statistics generated by market activity, such as past prices and volume. Purpose: to identify trading opportunities and make informed decisions. 2. What are moving averages? Definition: a moving average is a statistical calculation to analyze data points by creating a series of averages of different subsets of the full dataset. Types of moving averages: simple moving average, which is the average price over a specific number of periods; exponential moving average, and this gives more weight to recent prices, making it more responsive to new information. 3. How moving averages work. Smoothing effect. Moving averages smooth out price data to identify the direction of the trend. Trend identification. Uptrend. Price consistently above the moving average. Downtrend. Price consistently below the moving average. Support and resistance. Moving averages can act as dynamic support and resistance levels. 4. Using moving averages in trading. Let's glance at the crossover strategies. Golden cross. Short-term moving average crosses above long-term moving average, indicating a potential buy signal. Death cross. Short-term moving average crosses below long-term moving average, indicating a potential sell signal.
So here the purpose of this section is to demonstrate how we put on or implant the 200-day moving average and the 20-day moving average on this chart. I mean, as traders, we use these two averages very frequently when we're using the moving averages. So let's get into it. I'm using the Yahoo Finance charts, and I'm going to go to indicators, select moving average. I'm going to do the 20-day moving average first, and we're going to change the period from whatever it is to 20 days. And I'm going to select a color. If I don't like purple, I'm going to use green and save. Boom, there we go. That's a 20-day moving average chart, and it's a short-term moving average. Bear that in mind. We'll pick that up later on. So we're going to go back to indicators, select moving average. We're going to change this to 200. We're going to change the color as well, red, and save it. And there we go. We have the two main moving averages. One is the 200-day, which is the long-term moving average, and two, the 20-day moving average, which is a short-term moving averages. Let's jump off into this Nevada chart. It's showing us the price movements for the last 12 months. And so we have the 200-day moving average plotted there in red and the 20-day moving average in green as well. So we're going to look at the long-term trend, which is a 200-day right here. So as we compare it with the stock price movement, we are confirming that the stock is in an uptrend, and that's very clear and precise. Now the short-term movements using the 20-day moving average, you see right here the stock is in an uptrend, but it's right here, it's in a downtrend as it's below the 20-day moving average. But in looking at this chart, I always say, hey, let's move with the strong trend, the long-term trend, 200-day moving average, and I use this mainly. So whenever I see a support right here, I know, hey, this is a buying opportunity using the candlestick and how these candlesticks are forming. Here as well is another support area. At the top here is a resistance area, looking at those candlesticks here as well and here as well. So it's very important to know and see what this chart is telling us. It's actually telling us a story, and very importantly, we want to walk away from this section recognizing that the stock is in an uptrend using the 200-day moving average. At the same time, you can use the short term, but you can only say it is in an upward trend when it is above, the price movement is above the 20-day moving average, as you will see here, and it's below the 20-day moving average here, so it's in a downward trend. So it's for you to use both medium term and long term moving average and decipher where the entry points are for your trades, whether you're going to be buying or selling, because both trades can be executed depending on how you make your decision. For example, here is a buying point. Here is a selling point, selling point, selling point, another buying point right here. But we're using the moving averages to help us decipher and to make those decisions. Let's jump into the next section and see what we got going on. So this is a very interesting chart, and we're going to walk away with a few lessons from this chart. I like it because it has a contrasting perspective. On the left side of the chart, you're seeing an uptrend in Intel between October and say March, April this year. So you see the 200-day, and you may have already gotten used to the 200-day moving average. It's moving upward, and the price action is above it. So at this point to right here, the stock is in an uptrend, okay, and very clearly and very evident. Over on the other side, the second half of the chart, you see the stock prices are below the 200-day moving average, and so I can confirm here that the stock is in a downward trend. Very importantly, to confirm the downward trend is what is called a dead cross, whereby the short-term moving average, the 20-day moving average, is crossing over the 200-day moving average, and we had touched base quickly on this in the presentation so far. So this is a very clear and evident picture of the dead cross, whereby the short-term moving average is crossing the 200-day moving average and confirming that the stock is in a downtrend. So this is very clear. I like this picture. It gives us a clear comparison, and in the next video or in the next section, I will be going to show you a clear picture of the opposite of the dead cross, and I'll get into that very quickly and shortly. This is the Guild chart showing the price movements over the last 12 months or 1 year. And so I want to point out to you the golden cross right here, which is a 50-day moving average crossing over the 200-day moving average. The 20-day moving average is crossing over the 200-day moving average. And so we're confirming what is called the golden cross, in which at this point the stock is now in an uptrend, and it's in contrast to the fact that it was previously in a downtrend. So let's walk away from this chart with what is called the golden cross, and it's, just to repeat, it's where the 50-day moving average cross over the 200-day, and also we could use the 20-day as well, but it's where the short-term moving averages cross over the 200-day moving average, and the stock is now in an uptrend. Very good. Let's move on to the next section.